You're watching Business Incorporated live on Channels Television. Coming up today, Elon Musk SpaceX set to launch 3 South Africa-produced nano-satellites. Mozambican court clears former head of Standard Bank Group's local unit of illegal forex transaction. Plus, Ghana removed from EU money laundering list. Thank you for joining us. I'm Ladi Williams. Now, let's kick off first with intraday activities. In Africa, we see Nigeria's main index declined marginally by 0.01%, while South Africa's index dipped 0.81% at intraday. Elsewhere, Egypt's exchange recorded a negative performance as it closed for the week on Thursday. Kenya also closed the Thursday session in negative territory. Now to the Middle East, where trading activities were in full swing at intraday in the United Arab Emirates, except for Saudi Arabia and Dubai markets, which were closed for the week. The Abu Dhabi and Dubai indexes traded in opposite direction at intraday. The Abu Dhabi index was up 0.35%, while Dubai's index traded lower by 0.41%. Meanwhile, in Saudi Arabia and Qatar, markets closed positive for the week. And Germany's economy is growing again, but it's far from a boom that was once promised. Official GDP figures published show a return to growth for 2021. Let's hear more now from Rob right there in Berlin. Great to have you, Rob. Well, Germany's statistics agency says the economy expanded by 2.7% last year. How is this news being greeted?
Well, it is certainly welcome news that the German economy did return to growth during 2021, having shrunk by a massive 4.9% in 2020 during the worst of the pandemic. However, this figure is still well below predictions before the start of 2021, that growth could be as much as 4.4% for the year. That's, of course, because the pandemic has dragged on much longer than anyone had hoped it would. As a result, there were various challenges that limited the extent of the bounce back last year, namely supply shortages, rising energy costs, and restrictions on citizens and businesses aimed at containing the virus. So overall, 2021 is being seen really as a bit of an economic letdown for Germany. Where the government back in 2020 had been hoping for Germany to lead Europe's economic recovery with a spectacular bounce back in 2021, actually Germany is lagging behind its neighbours, if anything.
But why isn't Germany, recovering as fast as other major European economies there?
Well, one of the key reasons for that is the nature of Germany's economy. It's an economy built on manufacturing and built on exports, and these are two things that have been very heavily hit by supply shortages and delivery bottlenecks. As economies have bounced back from the worst of the pandemic, demand has boomed and supply hasn't been able to keep up with it, basically. A key way in which that's manifested itself during 2021 was in the global shortage of semiconductor chips. These are essential to a lot of German products, including Germany's most famous product, cars. And the fact that German car makers couldn't get hold of semiconductor chips was a major problem in 2021. It led to production lines having to be shut down. In the end, 10% fewer cars were sold last year than in 2020 in Germany, which was already a bad year anyway. With all manner of components and raw materials also in short supply, German manufacturers have been unable to produce at their normal level and unable to drive those exports that are all important to the German economy. And these are all problems that have carried over into 2022 as well.
And we had signs, Wednesday, the U.S. inflation could finally be peaking. Did that inspire confidence on European markets?
Well, European markets really failed to capitalize on the hope that the lower inflation growth rate in the US in December provided. The pan-European Stocks 600 dipped very slightly on Thursday. The US inflation data was really overshadowed by the continuing surge in coronavirus cases in Europe. Germany is among the countries that's currently posting record numbers of cases thanks to the Omicron variant. Construction stocks were one of the big losers from Thursday. Swiss plumbing supplies firm Geberit bemoaned increasing uncertainty in its quarterly update. Its stock fell by almost 4% during the day. We also saw falling share prices in the personal and household goods sector and in healthcare. Tech stocks, however, continued their rally. They gained for a third straight day after the world's largest contract chip maker, TSMC, announced record quarterly profits thanks to very strong demand. And that led to strong performances in turn for other semiconductor producers too on the stock market.
All right, Rob, thank you so much for that update. Rob Watt, right there in Berlin. Let's head on to the UK now with Juliana. Great to have you, Juliana. Well, see, the UK economy surpassed its pre-pandemic level for the first time in November after growing by 0.9% over the month. What are the drivers here? Hello, Juliana.
Downing Street, the British economy is now 0.7% larger than it was before. Economists had anticipated, I believe they forecast about a 0.4% increase. It actually
Hello, Juliana.
Even though it takes place in late November, lots of retailers were putting up sales in the beginning of November. So really good news. But there's always a but when it comes to business data. There are concerns about December's GDP.
All right.
June would just put in place in December. So lots of Christmas parties. Mirror, we got to look ahead to see what's coming next.
Yeah, apologies. Seems we're having a little poor connection, there. But if you can hear me, Juliana, well, according to a quarterly industry survey, manufacturers in Northern Ireland have, ranked the post-Brexit arrangements for trade in Northern Ireland as the least of the challenges facing their businesses. What are you hearing about this?
Yeah, this is a pretty interesting results from this, as you said, Northern Ireland manufacturing industry quarterly survey. They've spoken to several businesses, and even though if you was to read the headlines or listen to us, you would think that businesses on the opposite side of the Irish Channel, Irish Sea, apologies, were worried about the Northern Ireland Protocol, were getting involved in this political tussle, but that's far from the case. According to them, as we just said, it's their least worry. They're more worried about the pandemic. They're more worried about staff shortages. They're more worried about stocks being depleted. So for those who are anti-Brexiters, this isn't great reading because, of course, they've been saying for a very long time, which is why Brussels and Downing Street are still tussling over the protocol, that it's been difficult for businesses travelling to and from the rest of the United Kingdom with Northern Ireland. But according to those who were surveyed today, it couldn't be far from the truth.
All right. Well, it's a Friday. How are the markets looking at it today?
Yeah, not great, actually. The FTSE All-Share, because it's internationally focused, has been dragged down by the rise in GDP figures, which has lifted the pound. So the FTSE's down. The FTSE All-Share is down 0.12%. The FTSE 100 is lower by 0.11%. And the FTSE 250, that's down by 0.28%. In the currencies market, the British pound is up, as I was saying, against the US dollar by 0.20%, up on the euro by 0.16%, but down on the Japanese yen at intraday by 0.04%, Maddie.
All right, Juliana, thank you so much for that. Enjoy the weekend. All right, moving on to the U.S. now. See, U.S. stock futures rose during early trade today ahead of earnings from the major banks. Futures contracts tied to the Dow Jones Industrial Average advanced 108 points, or 0.23%. S&P 500 futures were up 0.13%, while NASDAQ 100 futures was down 0.02%. Let's get a summary of yesterday's close now from our U.S. correspondent, Maria Bird.
The U.S. stock market took a downward turn on Thursday as the S&P 500 was down 1.42%. The NASDAQ fell by 2.51%, and the Dow Jones was down by 0.48%. It is clear that investors were concerned of the number of first-time unemployment filers, which has taken an increase. This is definitely having an impact on the jobless claims reports by the Labor Department. It is also a bit unclear for investors as to what's happening with inflation, which earlier in the week there was a spike in inflation, despite the chairman's report that inflation would be controlled in 2022.
All right, that was our correspondent there in the U.S., Mary Bird. Well, stocks in Japan and South Korea led losses in major Asia-Pacific markets today as a recent rally in U.S. stocks broke momentum, with the NASDAQ snapping a three-day winning streak. Japan's Nikkei 225 fell about 1.28% to close at 28,124 points, while the Topix tumbled 1.39% to 1,977 points. Notice in tech stocks declined. See, SoftBank was down 1.24%, while Sony lost nearly 2%. South Korea's Kospi was down 1.36% to close at 2,921 points. And Australia's ASX 200 dipped 1.08% to close at 7,393 points. With bank stocks falling, Hong Kong's Hang Seng Index fell 0.32%. In the final hours trading, the Hang Seng Tech Index recovered from earlier losses to last decline of 0.75% as Alibaba declined 2.5% and JD fell 2.86%. Mainland Chinese stocks struggled for direction as the Shanghai Composite declined nearly 1% to 3,521 points, while the Shenzhen Component traded little change to close at 14,150 points. And oil prices eased for a second session on Friday on growing concerns that Washington may soon act to cool prices, while movement controls in China to rein in a COVID-19 outbreak weighed on fuel demand. Brent crude futures fell 30 cents to $84.17 a barrel. U.S. West Texas Intermediate crude was down 45 cents to $81.67 a barrel. See, China, the #2 oil consumer globally, has suspended some international flights and stepped up efforts to reining a virus outbreak at Tianjin, while the highly transmissible Omicron variant has spread to the northern city of Dalian. And gold prices on Friday were poised for their best weekly gain since last November, as investors await economic data that could provide clarity about U.S. Federal Reserve's tapering policy, while a weaker dollar and treasury yields supported the bullion. Spot gold was flat at $1,820 per ounce. As of early trading, U.S. gold futures edged down 0.1% at $1,819. Spot silver shed 0.2% to $23.03 an ounce. Platinum was up 0.1% to $970, and palladium 0.4% there to $1,881. Well, the dollar, weakened against a basket of currencies on Thursday to a two-month low. Day after data showed an expected surge in U.S. consumer prices in December. U.S. 10-year Treasury yields eased off two-year highs hit earlier in the week. And now to our next conversation. We'll see cybercrime. It's one of the pressing challenges plaguing economic activity in Africa, with poorly secured telecommunication infrastructure in many African countries. The footprint of cybercrime is exacerbating the numerous socioeconomic problems in the region. As Africa's gross domestic product reached $3.3 trillion in 2017, the cost of cybercrimes for the same year also amounted to a total of $3.5 billion. You see, Nigeria, Kenya, and South Africa recorded the largest losses. According to a report by Checkpoint Research, Africa experienced the highest volume of cyber attacks in 2021 across 5 served regions. Let's hear more now from Justice Anyai, cybersecurity evangelist at Checkpoint. Great to have you.
Thank you very much, Ladi, for having me.
Yeah, so across the continent, an organization had to contend with an average of 1,582 cyber attacks per week, which is an increase of 13% from 2020. What drove this?
Yeah, you're very correct. We saw a very huge increase in the number of cyber attacks in Africa, with an average of 1,582 per week per organization, which also represented a 3% increase from 2022. Now, we see a lot of businesses moving to digital platforms to drive their business goals and objectives, which is also very good. But that also has seen loopholes in the way they moved to these digital platforms. The COVID-19 pandemic also accelerated the move to this digital platform for some organizations that were not prepared for the move. And this also gave room for cyber criminals to now infiltrate and took advantage of the mistakes, the governance mistakes, the mistakes they could not address while moving their critical resources to these digital platforms. And lastly, last quarter saw the world experienced the Log4j cyber pandemic, which exposed a lot of vulnerabilities on digital platforms that businesses use to drive their businesses. And this gave room for attackers to increase the attack on these, and I say global organizations now, and this gave room to the increase in the number of attacks on a global scale.
Right, quite interesting. But what sectors would you say suffered the most attacks?
Now, from an African I would say from an African perspective, there are three key sectors that ranked the top three ranked sectors. Number one, the education and research sector, which saw about 1,605 attacks per week per organization, which represented about 75% increase from 2022. Government and military also saw an increase with about 1,133% number of attacks per week per organization, which also represent about 51%. While ISPs and the communication industry saw 1,079 attacks per week per organization, which represented about 51% increase from 2022.
All right, so let's look at money right now. What does it cost to protect an organization or country from these attacks?
Yeah, thank you. That is a very good question because globally speaking and holistically speaking, it is cheaper for you to prevent an attack than to be in the mode of or to be remediating the attack after it has come into your after you've been infiltrated. Now, if you look at the cost of data breach, on average it costs an organization about $3.8 million. This is the global average now to prevent an attack. And it's an attack on average stays within an organization for about 280 days. And this is statistics from Ponemon Institute. So if you look at it, it is easier for you as an organization to put in the right preventive capabilities to address attacks before they get into your organization. And this cut across both having the right business strategy, having the right preventive strategy from a technology point of view, and also having the right policies in place. So it cut across these whole areas, but it is far, far, far cheaper for you to have preventive capabilities in place, be able to prevent these attacks, and leverage on the best technologies as much as you can to basically secure your critical asset as you move your digital platform to or your business your business critical infrastructure to currently involving the digital platforms.
Okay, makes sense. Well, what's your outlook now for the cyberspace security? Now we're in 2022. How are you seeing it going forward?
Well, it's going to be very challenging, I must confess. We're going to see, because last quarter saw vulnerability that exposed the IT infrastructure on a global scale, right? And we see a situation whereby attackers are going to start leveraging on this vulnerability to perpetrate attacks on organizations. And we will advise every organization to number one, start having the right partnership with the right organizations from a cybersecurity standpoint, to begin to start putting the right preventive capabilities. As you adopt new technologies, as you adopt mobile technologies, as you adopt cloud-based technologies, as you take your business from on-prem to cloud-based infrastructure, also understand that security has to be top-notch on those platforms. And that is why we're here as Checkpoint Software Technologies. There needs to be investment from a cybersecurity perspective from business leaders. The CISOs would need to be given the right parameters, the right tools, the right financing to do their jobs to protect organizations from the cyber threat or the cyber pandemic that we envisage in 2020.
Cyber pandemic. All right, Justice Zaya, that's a quite interesting one there. Cybersecurity evangelist at Checkpoint. Thank you so much for coming on the program.
Thank you very much.
All right, now let's move on to other stories. Now, see, SpaceX will launch 3 South Africa-produced nano-satellites into orbit as part of the upcoming Transporter-3 mission, the first wholly made in the continent of its birth to be sent into space. The liftoff is scheduled to take place in the U.S. later on Thursday, as it's part of a so-called ride-share, where companies or governments book a slot for their craft aboard SpaceX rockets, and more than 100 space vehicles are taking part in the program. Education experts believe this will further cement South Africa's position as an African leader in small satellite development and help the country capture a valuable share of a niche market in the fast-growing global satellite value chain. Musk is the world's richest person with a net worth of about $282 billion. According to Bloomberg Billionaires Index, he was born in South Africa's capital of Pretoria before moving to North America as a young adult. And a Mozambican court cleared the former head of Standard Bank Group's local unit of accusations made by the nation's central bank that he was involved in manipulating the foreign currency market. The Moha Nwoko the Banco de Mozambique in July barred from corporate positions. Local lenders had no role in boosting the strength of the local currency, according to a ruling by the Tribunal da Polícia right there in Maputo. In a separate judgment, the court upheld the bank's finding that the South African lender was operating a payment system based outside the country without central bank approval. And the Central Bank of Mozambique last year temporarily suspended Standard Bank from currency trading in the country for suspected foreign exchange manipulation before fining the lender and its management. And Africa's top public health bodies in talks with Pfizer about bringing in supplies of its antiviral Paxlovid treatment pills for COVID-19 to the continent. According to Pfizer, Paxlovid was nearly 90% effective in preventing hospitalizations and deaths, and data suggested it retains its effectiveness against Omicron. Governments around the world are scrambling to buy Paxlovid, while Merck's Molnupiravir has faced setbacks after disappointing trial data. Africa has officially recorded just over 10 million cases of COVID-19 since the start of the pandemic, though real numbers likely to be much higher due to patchy testing. Several African countries are going through fourth and fifth waves of infections. And following a successful evaluation of Ghana's regime against money laundering and financing of terrorism, the Financial Action Task Force has removed the country from its list of non-compliant jurisdictions. The European Commission removed Ghana from the EU blacklist by acknowledging that it no longer has strategic deficiencies in its anti-money laundering, counter-terrorism financing regimes. According to the Council, the European Union, the FATF welcomed significant progress made by Botswana, Ghana, and Mauritius in improving its AML CFT regime, and noted that Botswana, Ghana, and Mauritius have established a legal and regulatory framework to meet the commitments in their action plans regarding the strategic deficiencies that the FATF had identified. The European Commission in May 2020 listed Ghana and 11 other countries as having lapses in countries' AML and CFT regimes, thus posing significant threats to the European Union's financial system. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Enjoy your weekend.